It's true, insurance CEOs get lots of calls for action on sustainability, and that's from multiple fronts, from regulators, from rating agencies, from shareholders, from boards, from public perception, activists, and also, of course, from clients and employees. So there's an increasing need to act. And we believe that announcing a long-term aspiration, reducing your own carbon footprint, and even promoting sustainable investments are a good start, but they're way not enough. So how should an insurance CEO think about his or her climate strategy? The first axis is about setting an ambition and working to make it coherent and compatible with the purpose or with the existing values or with the existing ESG strategy. And it's also about acting responsibly and committing to reducing their own Scope 1 or Scope 2 emissions. The second axis is about safeguarding the business performance. And as we see with number 2, it's understanding the exposures on both sides of the balance sheets. And that's true for physical risk, for transition risk, and for liability risk. And often there's a lot of emphasis on physical risk, but equal attention needs to be on transition risk and liability risk. And then, as we see with 3 and 4, one needs to adapt how you underwrite and how you invest. The third and final axis is tapping into opportunities. And on the asset side, that's deploying investments in sectors that will grow and gain from the massive decarbonization efforts. On the liability side, there are all kinds of new services to develop beyond risk transfer, but also there's innovation risk transfer, especially for all the decarbonization technologies. In general, carriers are least advanced with respect to sustainable underwriting, even if some are leaning forward, such as the Net Zero Insurance Alliance. And it cannot be that an insurer invests sustainably and uses all kinds of sophisticated ESG scores for all their financial securities, while at the same time, they're not being coherent or equally detailed on the underwriting side. So what does it mean? In the same way, earnings, capital, cash flow were the key portfolio steering dimensions so far, the insurance executives will need to add a fourth dimension, and that's the carbon intensity on the underwriting portfolio. And from that point, there will basically be two postures. The more reactive insurers will wait and assume that through the underlying decarbonization of the economy, their underwriting portfolio will gradually trend to net zero. The more proactive ones, however, the more proactive insurers, they will track, measure, and take continuous management actions to also steer the portfolio they insure for carbon. An exciting but very intense journey ahead.